Frank, you have to see this. Analysts are literally calling this the biggest wealth opportunity in stock market history. Bigger than Google, bigger than Meta.
Okay, let me guess. Someone found a new crypto coin?
No! SpaceX! Elon is taking it public. The reports are saying the valuation could be... Wait, let me check the article. Up to $2 trillion. Frank, I'm serious right now. Is this it? Is this our actual ticket to financial freedom?
Okay, I get the hype, I really do. But before we even think about touching our family savings to buy rockets, we need to look at the brutal math behind this. Because a great company...
doesn't always mean a safe investment, which is exactly why we do this. I'm Lynn.
And I'm Frank. Welcome to Talk and Wonder. We create easy-to-understand whiteboard animations covering family finance, investing, passive income, and debt management.
Our goal is to break down complex financial topics, help you avoid traps, and build wealth together. If you want to secure your future, you are exactly in the right place.
Right. So, back to this SpaceX FOMO. Look, I'm not denying what Elon Musk built. The guy took his PayPal money in 2002 and, instead of buying a yacht, sank it into rockets because he thinks we need a backup plan for humanity.
Which sounds completely insane until you realize it's actually working. I mean, Frank, they land rockets back on the pad backwards. The Falcon 9 is literally the most flown rocket in history.
Yeah, that one idea of reusing boosters, it completely changed how NASA handles space overnight. They launched over 130 times in 2024 alone.
And we can't forget Starlink. I mean, we literally know people using it. They've launched over, I think it's 6,000 satellites?
Yeah, somewhere around there.
And they have over 4 million customers now. People on boats, planes, the middle of nowhere. I read they are pulling in like $15 billion a year in revenue.
Which is the crazy part. Starlink makes more money than the actual rocket launches. And here's the thing you have to understand as an investor. They don't pay dividends.
Right, they reinvest everything.
Exactly. $2 to $3 billion a year goes straight into Starship, that massive 40-story rocket they want to send to Mars. So, as a company, phenomenal. As a piece of human engineering, unbelievable. But as an investment for our family's portfolio, that is a completely different conversation.
Wait, why? If the company is literally dominating the world, shouldn't the stock be a guaranteed win? I mean, we don't even have to wait for the IPO. My friend Sarah was saying there are these private platforms where you can just buy in early and...
Okay, let me stop you right there. You're talking about platforms like EquityZen or Forge Global, right? Where regular investors can supposedly buy shares in private companies before they go public.
Yeah, exactly. I mean, if we know the IPO is going to be massive, why wouldn't we just get in now? It sounds like the perfect backdoor to build our wealth before Wall Street takes over.
It sounds great in the headlines, but there is a lot they don't put in that headline. First of all, the minimum investment. We are not talking about opening Robinhood and buying, 10 shares for a couple $100.
Okay, so what's the minimum? Like 5,000?
Try $25,000 minimum, and some deals require even more.
Shocked. Frank, stop. $25,000 just to get in the door?
Exactly. They're trying to be exclusive. But honestly, the money isn't even the scariest part. It's the liquidity, or, well, the complete lack of it.
Meaning we can't get the money out if we need it.
Bingo. When you buy shares on one of these pre-IPO platforms, your money is locked up. You can't just sell whenever you want to fix the roof or, pay for the kids' tuition. You are stuck in that investment until there's a liquidity event, which usually means the actual IPO or if the company gets bought out.
But wait, the reports are saying they might go public in, I don't know, mid to late June, so that's not a long wait.
Right. They filed a confidential IPO with the SEC, but we don't have a confirmed date. They could delay it. It could be years from now. Technically, yes, you can try to sell your private shares, but the restrictions are a nightmare. Whenever it's way harder to sell something than it is to buy it, you've got to be extremely cautious.
Yeah, that makes sense. I mean, tying up $25,000 of our family's safety net indefinitely is that's how people go broke. But Frank, what if the growth is just so astronomical that it's worth the risk?
And that brings us to the biggest illusion of all, the whole getting in early myth. Look, SpaceX's private valuation, it's already around $350 billion.
Okay, but if the IPO is going to be 2 trillion, 350 billion still sounds like a bargain.
No, because that 350 billion already reflects almost all of the excitement. It is not a secret anymore. The market has already priced in a massive amount of future growth. So even if you get in before the IPO, you're not getting in cheap. You're just getting in early. There's a huge difference.
Okay, I need a second. So you're saying we'd be paying premium prices for locked up shares that we can't sell in an emergency.
Exactly. Oh, and fourth thing, you're usually not even buying direct shares in SpaceX.
Wait, what am I buying then?
Most of the time, you're buying into a special vehicle, a structure that holds the shares on your behalf. So now you've got management fees, extra structural risks. It is completely different from just buying a normal stock on an exchange.
Okay, so if the pre-IPO platforms are a trap for regular families like us, is there any other way to get exposure to space without betting the farm?
Well, sure, there are publicly traded companies connected to the space economy. Rocket Lab, Planet Labs, they're already on the stock market, but they aren't SpaceX.
Right, so we're back to square one. If the private market is too risky and locked up, then our only real option is to just wait for the IPO day, right? Like, wait for the bell to ring and buy it the minute it hits the public market. That has to be the play.
You think buying a hyped-up stock on day one is a safe strategy for our family? Because I have 30 years of history that says otherwise. Look, in my 30 years of investing, I have been offered hundreds of IPOs, and there is literally only one that I regret not buying.
Let me guess. Google.
Google, 2004. But the rest of them, most are basically sitting at zero now. Because I have seen this get in on day one play out over and over again, and the story almost always ends the same way.
Okay, but this is Elon Musk. This is rockets to Mars. It's not just some random app.
Really? Let's talk about Facebook in 2012. You want to talk about hype? Everyone wanted it. It was the biggest tech IPO ever at the time. The stock opened at around $38 a share. People were literally lined up to buy it. And you know what happened?
It dropped?
It dropped, and it kept dropping. If you were a retail investor who bought in on day one because of FOMO, you had to wait over a year just to get back to where you started. A full year just to break even.
Okay, fair point. But Facebook obviously worked out in the long run. I mean, look at Meta now.
Sure, but we only hear about the survivors. What about Uber in 2019?
Oh my God, yes. I mean, we literally almost did this. We talked about buying Uber because everyone in the world used it. It seemed like a total no-brainer.
Thank God we didn't. The stock dropped the day it went public and stayed below its IPO price for years. If you bought Uber on day one, you waited 4 years before you were finally in the green. 4 years of your money doing absolutely nothing.
Okay, wow, that actually is terrifying. Because if we had put our kids' college fund into that, I would have panicked and sold it at a loss way before year 4.
Exactly. That's what happens to everyday families. And look at the data on IPOs in general. Only 29% of IPOs traded at a higher price 10 years later.
Wait. Are you serious right now? Are you telling me that...
Yes, 71% of IPOs trade at a lower price a decade later. Overall, buying on IPO day is a statistically losing strategy.
But Frank, even if we just carve out the big, sexy tech stocks, surely they do better.
Actually, let me think. Over the last 20 years, the return on the top tech IPOs has been about 490%.
Which sounds amazing. I would take 490%.
It sounds amazing until you realize the S&P 500, just a boring, low-cost index fund, performed almost 800% over that exact same period. You are vastly underperforming the broader market by chasing these sexy tech IPOs. And frankly, a huge chunk of that 490% was probably just driven by Google anyway.
Okay, so if the math is that bad, why is there so much hype? Why is the news constantly pushing us to buy?
Because of who is running the IPO. The investment bankers hired to take SpaceX public, they are not financial analysts trying to protect your family's wealth. They're salespeople.
Oh, right, they get a cut.
A massive cut. Their entire job is to go on a roadshow and hype the crap out of the stock. They want to create a frenzy, so retail investors, regular people like you and me, rush in. But here's the dirty secret. The institutional investors, the big hedge funds, they probably already got their shares before trading even opened to the public at much better prices.
So by the time I open my brokerage app on IPO day and hit buy, I'm actually buying at the peak of the hype. I'm just providing the cash for the big guys to cash out.
Bingo. The excitement alone pushes the price to a place where the math simply does not work in your favor. And that brings us to the most important rule of investing, a rule that will fundamentally change how we look at this SpaceX deal, or frankly, any deal we ever make for our family.
Okay, I'm listening. What's the rule?
Price and value are not the same.
Wait, what do you mean price and value are not the same thing? If a stock is trading at $100, its value is $100, right?
No, the price is what you pay. The value is what you actually get. And the gap between those two numbers, that gap is everything. Let me give you a really simple example. Let's say our neighbor across the street is selling his house.
Okay, the one with the horrible green paint?
Yeah, that one. Let's say he's asking $500,000. That's the price. But we've been inside that house. We know the roof leaks, the foundation has cracks, and the kitchen hasn't been updated since like 1987.
So it needs a ton of work.
Exactly. Based on all the repairs we'd have to do, the actual value of that house might only be $300,000. If you pay his $500,000 asking price, you just made a very expensive mistake.
Right, because I still have to put another $200,000 in just to make it livable. So I'm essentially paying $700,000 for a house that's only worth $500,000 when it's totally fixed up.
Bingo. Now, flip it around. Same house, same exact problems, but this time the neighbor gets a new job across the country and he's desperate to sell fast. He drops the price to $150,000.
Oh, wow. Okay, I'd buy that tomorrow.
Right? Because now the price is way below the value. You buy it for $150, you put $200 into repairs, you're all in for $350, but the house is worth $500. That $150,000 gap, that's what investors call a margin of safety. You are essentially buying a dollar for 50 cents.
Okay, I get the house analogy, but how does this apply to SpaceX? We can't inspect the foundation of a rocket company.
We can't inspect their foundation, but we can look at the math. A great story becomes a terrible investment if you pay the wrong price. So let's bring this back to the whiteboard. Let's say SpaceX literally IPOs at a $2 trillion valuation.
2 trillion with a T?
With a T. We don't know their exact profits, but recent reports estimate they bring in about $15 billion a year in total revenue. That's money coming in before expenses. $15 billion.
Okay, 15 billion sounds like a lot of money.
It does, until you compare it to a company that's actually worth that kind of money. Let's look at Google. Right now, Google's market cap is roughly double what SpaceX is asking for. So Google is around, let's say, a $4 trillion company.
So if Google is twice the size of SpaceX, they should be making twice the revenue, right? So 30 billion?
Sure. Lynn, Google's revenue last year was over $400 billion.
Wait, what? Are you serious right now? 400 billion?
I'm serious. So think about the math here. You could buy into Google, and you're paying about 10 times their revenue. Or you can buy into the SpaceX IPO, where you're paying, I think the math is over 120 times their revenue, 120x.
Okay, but Frank, the whole argument is that SpaceX can grow way faster than Google. Google is already massive. SpaceX is building cities on Mars. They have the potential to grow so much more.
They do have incredible growth potential, but the problem is you're already paying for that growth today. It's already priced in. Look, let me ask you this. Would you rather pay Shohei Ohtani $60 million a year to play on your baseball team because he's a proven superstar with a massive track record, or pay a high school kid $30 million a year just because he has the potential to become the next Shohei Ohtani?
Well, when you put it like that, I'm not giving a high schooler $30 million.
Exactly. With SpaceX at $2 trillion, you are paying for the absolute best-case scenario to happen over the next 20 years. And if anything goes wrong, if a rocket blows up, if Starlink slows down, that stock price has no safety net. It will plummet.
So essentially, buying at the IPO price means there is zero margin of safety for our family's money.
Zero. But I get it. I really do. Part of you is still sitting there thinking, yeah, but what if this is the one? What if we just put a little bit of our savings in to see what happens?
I mean, yeah, honestly, I still kind of have FOMO. It's Elon Musk. It feels like gambling, but like good gambling.
And that right there is exactly what we need to talk about next, because there's a very big difference between investing for our family's future and gambling.
Look, I am not here to tell you that you're stupid for having FOMO. We all have it. But we need to be dead honest about what we're doing, because there's a word for putting money into something just based on excitement rather than value.
Speculating.
Right. It's not investing, it's speculating. If you want to take a little bit of money, what we call fun money, money you are totally fine with losing, and bet it on the SpaceX IPO, great, do it.
As long as we call it what it is. A lottery ticket.
Exactly. A bet, a fun play. But the moment you start thinking it's an investment to secure our kids' future, that is where everyday people get completely wiped out. Because right now, the decision to buy this IPO is driven entirely by emotion, not math.
Okay, so if the IPO is a gamble, what is the actual foundation? Like, if someone is watching this right now and they have that FOMO, what should they do with their money instead?
First things first, if you have a 401k at work, max it out. Put it in low-cost index funds or ETFs. If your employer offers a match, that is literally free money. It's an instant 100% return before you've even invested in a single stock.
Yeah, there is no SpaceX trade in the world that beats free money from your boss.
Not one. Then, if you have a Roth IRA, max that out too. You secure the foundation first. You build actual wealth over a lifetime by buying great businesses at great prices. Real earnings, real cash flow, real value.
Right, because like we always say, excitement doesn't fund your retirement. Discipline does.
Exactly. And that really brings us to the core principles we live by in this community. It's what separates the investors who build generational wealth from the speculators who just keep making the same expensive mistakes over and over.
I feel like we need to repeat that one rule because it's literally the entire lesson of this video wrapped up in one sentence.
A great story becomes a bad investment if you pay the wrong price. Look, SpaceX is a phenomenal story. I'm not arguing that. Elon Musk is doing things nobody else can do.
The only question is, what price makes it a great investment?
Right. Every investment is just the present value of all its future cash flows. That means you are not buying the story of going to Mars. You are buying the real cash that this business is going to generate in the future. And if those numbers don't support the $2 trillion price tag, you walk away.
Which is so hard to do when the whole world is screaming at you to buy.
It is. In the short run, the stock market is a voting machine. Popularity wins. Hype wins. But in the long run, it's a weighing machine. The real value of the business always wins. You just have to be patient enough to let the noise fade out.
So we're not touching the SpaceX IPO.
Not with our retirement money. But it does make you wonder, though, if Elon Musk pulls off the impossible and actually builds that city on Mars in the next 20 years, will people look back and say that 120 times revenue was actually a bargain?